So, Austin's real estate market, what a roller coaster, right? If you've been watching it, you're probably asking yourself, what in the world is coming next? Well, in this explainer, we're going to break down the outlook for 2026, look at what the numbers are telling us, and explore where the experts think this is all headed. Okay, let's just dive right in. We're basically moving from a period of, absolute frenzy to what analysts are now calling the great normalization. And that's a really big deal. It's a massive recalibration of the market, and believe me, it is changing the game for both buyers and sellers. And to really get what's happening, you have to appreciate the sheer whiplash. I mean, just look at the difference here. Back in 2022, it was an extreme seller's market. We're talking bidding wars, waived inspections, homes gone in a matter of days. Now, it's a totally different world. A decisive buyer's market with price cuts, actual negotiation, and homes sitting for months. It's a completely different ballgame. All right, let's dig into the numbers. What does this correction actually look like when you strip away the headlines and just look at the hard data? Let's start right at the top at the absolute peak. Back in May of 2022, the median home price in Austin soared to a jaw-dropping $550,000. This was the number, the one that had everyone talking and defined the boom. Now, let's fast forward to today. As we're looking at early 2026, boom, that number has pulled back a lot. It's now hovering right around $435,000. So what does that mean? Well, that's a 21% drop from the peak. And this isn't just some small dip, folks. This is a major correction that has basically erased years of gains and reset prices all the way back to where they were in late 2020. And it's not just about the price, it's about the pace. This chart says it all. Homes aren't just flying off the market anymore, they're sitting for an average of 91 days. That feeling of buy now or miss out forever, yeah, that's gone. Now this is really telling. It shows you exactly who's in the driver's seat now. Over half, more than 50%, of all listings have had to cut their asking price at least once. It's a crystal clear sign that the power has swung from sellers back to buyers. Okay, so you see numbers like that, and it's natural to start thinking, uh-oh. Which brings us to the really critical question that is definitely on everyone's mind right now. Is this a crash? Are we about to see 2008 all over again? Is the bottom about to fall out of the Austin housing market? Well, the short answer, according to most analysts, is a firm no. What we're seeing is a market correction, which is basically a slow, controlled release of pressure. Think of it like letting the air out of a balloon slowly instead of popping it. And the biggest reason it's not a crash? It all comes down to Austin's incredibly strong economic foundation. For starters, just look at the job market. Austin's unemployment rate is holding steady at a very, very healthy 3.5%. That means people have jobs, people are getting paid, and a strong labor market is always the bedrock of housing demand. And the city is still a job creation machine. Even with things slowing down a bit from that crazy pace, we're still seeing a job growth rate of over 2%. That keeps Austin right up there among the top-performing big cities in the entire country. I love this quote from Matt Patton over at Angelou Economics. He says, "We are no longer an up-and-comer type of market. We are a top market nationally." And that's not just hype. That fundamental economic strength is what's acting as a safety net for the housing market, keeping it from a total freefall. So, okay, the foundation is strong. But that brings us to the big debate. Where do we go from here in 2026? Experts are pretty divided on this, and there are basically two very different paths the market could take. On one side of the ring, you've got the analysts who think we're basically at the bottom. This camp believes that prices are going to find their floor and stabilize sometime this year. And they're looking at a few things, right? They're hoping mortgage rates might ease up a bit, job growth and people moving here will continue, and simply that homes are just more affordable now. The idea is that buyers will see the value, prices will level off later in 2026, and a slow recovery will kick off in 2027. But then there's the other side. And this group is saying, hold on a second, the math just doesn't add up yet. They argue that simple arithmetic says prices still have a bit further to fall before things are truly balanced. And their entire argument really comes down to this one key idea, the affordability ratio. It's just a fancy term for a simple concept. What percentage of a family's income is going toward their monthly house payment? It's not about feelings, it's all about the finances. Okay, so check this out. That middle bar, That was the crazy peak in 2022 when Austin families were spending a whopping 47% of their income on housing. Unbelievable. After the correction, we're down to the bar on the right, 35%. But here's the kicker. That is still way above the historical norm, which is that bar on the left, sitting at about 31%. The numbers are still out of whack. And this is where the logic gets really simple. We can't really expect a massive jump in wages, and we probably shouldn't hold our breath for interest rates to just collapse. So the only major thing left to adjust is home prices. For that affordability ratio to get back to normal, this theory says prices need to drop another 9 or 10%.
So, with these two different stories on the table, what does it all mean for you? Let's get into our final section and break down the new rules of the game for 2026.
The bottom line is, the game has changed. If you're a buyer, listen up. This is probably the best buying opportunity you've had in years. You have choices, you have time, and you have leverage. The key is to negotiate hard and focus on finding the right home for you, not trying to perfectly time the absolute bottom. Now, for sellers, it's a different story. It's a competitive, price-sensitive market. You have to be realistic and price your home aggressively right from the start. There's just no room for wishful thinking anymore. So in the end, this great normalization, yeah, it's been painful for some, especially those who bought right at the peak. But it is creating a healthier, more balanced, and more sustainable market for Austin's future, which really leaves us with the big question going forward. Can Austin finally figure out how to balance its incredible explosive growth with the very real need for affordability? That is the challenge ahead.